I want to bring in Anthem Vault founder and CEO Anthem Blanchard with me right now. And Anthem, you are an expert on gold. Is now the time to take money out of equities and start looking more favorably at gold?
Yeah, I think it is, Maria. I think we've seen a really positive reaction in the gold market, and I think it's no surprise given all the issues that we've seen in the credit market. We've seen issues in emerging currency market. We've ultimately seen tons and tons of issues here with the general markets. And I think there's tons of speculation. We're seeing credit implode basically out of these credit markets and equities markets, and it's a flight to safety to gold. Gold is a store of value. It's been around for thousands of years, and all central banks hold it. Billions of people around the world have held it and hold it now. So that's where people are going, and you're seeing the price appreciate.
You agree with that, Chad?
I have to say no. I don't want to be rude.
No, you don't have to.
I think that
you're not going to take it personal.
No,
clearly gold is the fear trade, and that's why people are going there, because people are scared right now, and they've got good reason to be scared. I do not recommend it over the long term. I mean, if you look at long-term, results from gold, maybe you get 2 or 3%. There are periods, the 2000s, when it's a wonderful investment. But in my book, I got lucky with timing. At 1900, I said avoid gold. It looks a lot better at 1100, certainly, and to have 4 or 5% of your portfolio in gold, perfectly good idea.
Yeah. See, I look at gold as a hedge. I don't look at gold as a commodity because I feel like when you're expecting negativity from stocks and other markets, you want to go in gold. Is that the way you look at gold, as a hedge?
Yeah, it is a hedge. It's money. It's held its value for thousands of years. There's an adage that an ounce of gold buy you a nice suit in New York. It bought you a nice suit in London a few hundred years ago. It's held its value. It's a store of value. So governments can't create more of it. So, and especially when you have real negative interest rates, gold typically outperforms. So because it's a store of value.
Well, if I'm going to have my portfolio, if I look at where the safety is going to be for me, and I'm trying to hedge, as you pointed out, Maria, 10%, is cash going to be better for me than gold? Well, split the difference. I guess I'm in Switzerland this morning.
Yeah, that's a good point, Cheryl.
But because I look at it as kind of another form of cash, I guess, in some way. But you're right. But gold and silver yesterday, that's where all the money was into those two commodities.
So this is the I mean, if we were to see an accelerated downturn in stocks, you wonder if this is actually the place that gets it. I mean, the money has to go somewhere.
That's right. That's right. And we've seen it before. We saw it after the great credit contraction of 2008, and we saw gold and silver skyrocket right after that. I think we're seeing it again. Price talks. So prices are going up in gold and silver. Equities are going down. Right. The price speaks. So.
Right. Yeah, I mean, what is the demand story behind gold? I mean, when you look at fundamentals, tell us about them.
Yeah, well, one of the beautiful things about gold is extreme liquidity. So I think over the last 12 months annualized, you're talking about 30 trillion. So it's a tremendous amount of liquidity, and it is a flight to safety. It's no one else's credit risk. So that's one of the reasons people go into it. So there's no one else's liability.
In the short term, I would, the way stocks are doing right now, I would have to say, if we talk a week, a month, 6 months from now, gold's going to be higher.
You think so?
I just wouldn't say over the long term, it just doesn't deliver great returns.
I got you. The baby boomers, I think, have really kind of gravitated towards gold, but they're the ones that had their portfolios cut in half in 2008. So, I can't really blame them, I guess. It doesn't feel good to watch your portfolio fall apart.
Yeah, you could say that again. All right, we'll talk.